Hello and welcome to the Miko Bits show, and I'm your host, Miko Bits. Today I have Varun, who's from Hashflow, and Hashflow is an amazing liquidity thingamabob. It's really a powerful mechanism that allows access to kind of an amazing DEX-like contraption that pumps out kind of best prices. It's really an astonishing thing and requires probably a little more definition than what I provided. So, without further ado, here's Varun. Welcome to the Nico Bits show.
Hey, thank you for having me.
Yeah,
I think
very,
I like the
very,
definition. very, very,
yeah.
very precise, short,
Absolutely.
and
A
simple.
thingamabob. Yes,
Mhm.
it's very good. So, so just a quick disclosure is that my fund, Gumi Cryptos Capital, is an investor in Hashflow. Just so everybody knows. But tell us first off and foremost a bit about like what problem that you're solving.
All right, thank you. I think in the simplest way, we make price discovery a lot more seamless, right? The goal is to build the best decentralized trading experience for anyone to come and trade in a permissionless way, and essentially be able to trade anything on any chain and any asset class, right? So that's essentially where we want to get to.
Yeah, that's big stuff. And kind of unpack for us, you've already got some deployed smart contracts and you have kind of a really cool app that you can connect to on hashflow.com. So tell us what we're looking at there and, how it kind of solves this problem.
No, absolutely. So I think perhaps it makes sense to have a historic context of how DEX has evolved
Yeah.
and why what we're doing actually solves the problem in an interesting way. But I can also start in the most boring way possible, and then slowly unpack what was the trade-off and why you chose that trade-off and so on. Right. So I think that the most boring way to define Hashflow is to say DeFi native RFQ platform, right? That
Yeah.
essentially connects market makers to traders. The way it works is your end user or a taker requests a quote, and your market maker issues the quote, and then your taker likes it or hates it. If they like it, then they say yes, and they broadcast the trade on chain, right? And the swap happens at the smart contract level. So at the simplest level, it's essentially you have two parties interacting with each other, where price discovery sort of happens, an agreement happens off chain, and the execution and settlement of that price or that swap happens on chain, right? So what this does is it preserves the whole vending machine experience that people have come to love about Uniswap. But at the same time, it unpacks or unbundles Uniswap by moving price discovery from on-chain to off-chain, which in turn allows for better price discovery, and you get like nice interesting features like you can trade without slippage. You no longer are subject to any MEV exploits, but more importantly, you can actually price any asset you like that is not limited to spot or blue chips. Like you can go into non-delta one like options, futures, or anything else, and it becomes really, really simple to actually price them and trade them. And you can also build more core infra things like cross-chain swap that we deployed recently, right? And all these are possible because we went with this whole idea of DeFi native RFQ system, right? So I think that's kind of how it paints the picture.
That's a very lovely mental model. I mean, I think one oversimplification might be this idea of like a wholesaling,
Mm-hmm.
right? Where in a sense, what you have is you have kind of professional market makers that are kind of really determining sort of best price, right? And in a sense, kind of like a Costco, like you're basically bringing that to the retail masses, right? So that these best industry level prices aren't just relegated to like high volume OTC traders or some kind of shadowy cigar smoking back room, but that can just be accessed by anyone.
No, absolutely. I think if you look at it, for example, like if I wanted to go a bit more in a historic context, if you look at the evolution of DEXs, right, you start like obviously in 2016, 17, you had Coinbase, Kraken leading the world with their centralized exchange platform, and then came EtherDelta, which was like the I don't know if people even remember EtherDelta at this point, but that was one of the
Classic.
first order book decks used built on Ethereum. So they tried to replicate the entire order book. Didn't quite work, but we also realized the shortcomings was because of the scalability issues of having a on-chain order book, right? And then second generation, we had 0x APIs, which kind of created these APIs that anyone can use to essentially do RFQ, except the hope was, how you have folks that will basically build DEXs on top of that. But really, I think that 0 to 1 movement or moment happened with Uniswap, right? So Uniswap for the first time actually made DEX trading sexy, right? Like people wanted to trade because of the simplicity of anyone can just go and request a quote and receive something. Like they built a very, very high performing vending machine that anyone can trade with. And they also made the idea of putting assets into a smart contract more mainstream, right? Like before that, you're like, if you say you're going to use smart contract custody, you're like, no way, that's too insecure, right? So Uniswap kind of made the idea of trading against a smart contract really, really interesting. But at the same time, I think the shortcomings came in the form of, yes, we have this very high performing arbitrage machine that people can always arb against, where the price discovery happens on CeFi, and that is used as a price reference to trade against your Uniswap bonding curves to keep adjusting the price. But at the same time, it's also limiting in the sense that A, you cannot have good prices unless you have tons of assets or TVL locked into the pools. And
Yes.
B, uh, the price and execution is not guaranteed, especially if you go uh, towards long tail and move away from stables and blue chips. And not to mention, like the more sophisticated players start exploiting these things for things like MEVs and sandwich attacks and so on, right? So the idea was, yes, we have 0 to 1 solved for, but if you really want to see DeFi scale to the point where you're essentially solving for the 1 to N, where you onboard the next set of users, be it retail, be it institutional, and so on, what do they care for? Like, how do you build a better price discovery model that not only a source of pricing, but also builds a better experience in terms of what assets can they trade, not being subject to MEV exploits, not having slippage that they do not expect, being able to swap between chains, like not just within a chain, like going from like sending ETH to receiving AVAX on the other chain. How do you do it in a way that is actually really, really seamless, right? And I think these are the shortcomings that I feel like Uniswap was not able to solve at that point. And generally, I think it'll be really challenging to do it on any AMM model, right? So we're like, okay, maybe we should take a step back and figure out what's a better way to approach this problem so we can get to that dream state scenario, right? So
So maybe another slogan, probably a bad one, would be something like taking the A out of AMM.
LOL.
Like yeah, I mean
Yeah.
in a sense that there's this there like in TradFi there's this entire class of practitioners called market makers, right? And like it turns out that like you know that making all of those people into robots like it may actually not be a thing, right? And one of the things that's so interesting about what you're talking about with respect to kind of like optimization of price discovery, right? So there's two things that pop up immediately for me. One of the things that pops up immediately for me is the capital efficiency of the lack of kind of pooling, right? In the sense that you don't have as much of a need to kind of have a stocked machine, especially as you go into the long tail, right? So with RFQ, you just kind of have like, uh, it's sort of on demand, right? So there's an on demand mechanism. So I think you get capital efficiency there. But the other thing that I think is super interesting is the idea that price discovery and market making is actually a thing. And it's kind of maybe you could call it a dark art, right? In the sense that like there may be things like information asymmetries that contribute, right? Which I think relates to your concept of what MEV, right? So I'd love to kind of have your thoughts about like, is this sort of a rational way of thinking about that?
So could you repeat the question in terms of which?
Yeah,
Yeah.
yeah, yeah. So I think the gimme is just that you don't have to have huge piles of like assets just lying inside of a machine, right? So that's the gimme. But I think the more exotic part of it is the idea about mechanisms for price discovery, right? So obviously when you think about mechanisms for price discovery, there's sort of like this idea of lit and dark, right? So
Yeah.
what I'm thinking about is like the idea that like, obviously lit is like desirable in some sense. And I think some of the stuff that people are complaining about in the lending market right now has to do with how much there is that's dark. But I think from a price discovery perspective, like it feels like the world of dark has
Mhm.
more of an edge on the world of lit. I don't know what your thoughts are.
I like the Star Wars analogy there. I heard dark side is cooler though. So generally, I like
The
the
Sith Lords.
so. I mean, it's much more glamorous, obviously. But I think generally the way I think about it, not just from a Dex point of view, but general philosophy, is uh, everything is okay if there's a choice, right? Like things
Okay.
are bad when something is forced upon you, or you have no choice but to bow down to somebody with power, right? And you have no choice but to comply, even though you don't want to comply, right? So which takes me to a broader discussion on decentralization, right? So I think my thesis here is decentralization is a feature if it's by choice. So centralization is a feature if it's by choice, but it's a bug if it's forced upon you, right? So the reason it made sense for cryptocurrency or having the idea of decentralized money is because pre-Bitcoin, money was, if you consider money a technology, then someone had monopoly on the power of on violence, right? And they use that to
Yes.
enforce this technology onto everybody else. And you had no choice but to use that technology, even though it may not be in your best interest to use it, right? So what crypto did is it essentially gave people the choice. It said you no longer have to have a money that is run by monopoly, but instead you could essentially have money that is truly an incentive design choice, and instead of complying to this technology that is essentially a highly optimized rent-seeking mechanism, right, which is your fiat, you essentially have the choice to either opt in or choose a different incentive mechanism that fits
Yeah.
what you
So,
like.
so
Right? So,
what I like about what you're describing is that in the book Debt, the First 5,000 Years, they
mm-hmm.
actually talk about the evolution of debt,
Yeah.
starting out with kind of peer-to-peer debt and lending, right? And with peer-to-peer lending, you actually have this kind of amazing kind of opportunity where the person knows the borrower, right? And so
Yeah.
then there's this kind of like back and forth, right? Whereas I think the evolution of the first 5,000 years was the securitization, right?
Mm-hmm.
And the securitization gets so interesting because it creates this kind of impersonalness to
Yeah.
it where, and one of the things that happens that's so interesting about that is the evolution of society around what you described as the monopoly of the use of violence, right? Which is that the end of debt in kind of like civil society, if you want to call it that, is debtor's prison, right? Which is,
Yeah.
and obviously, how do they convince people to go, right? And obviously they convince people to go because they have like weapons and they have like,
Yeah.
enforcement, So when you think about, that as being sort of a monetary mechanism, it's really interesting to see what you're talking about, which is much more about choice, right?
Mm-hmm.
Because one of the things we can submit to are things like automated liquidations,
Mm-hmm.
and by subjecting ourselves to things like transparent automated liquidation, you then suddenly become completely consensual, right? Because
Yeah.
there actually isn't a need for anyone to use a gun because like your collections don't become difficult, right? Like, if you're in a smart contract and you're liquidated, like it's not like, oh, now we have to go over there and we have to repossess the guy's car. Like it's no,
Yeah.
like we have to foreclose on the guy's home. It's like, no, 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 like none of that's happening. Right. So I'm curious your thoughts.
Yeah, so I think there's a few things to unpack here, right? So I think to close the loop on the previous question around market makers versus AMMs, I
Yeah.
think generally the thesis is that price discovery could be somewhat centralized, and I think it's okay so long as it actually gives you other benefits and the users have the choice not to take the quote if they don't like it, right? So you get a price, you don't like it, you can go to Uniswap. That's completely okay. But if I force people to only use my, RFQ and not Uniswap or vice versa, then it becomes a problem, right? So I think our job here is to give you guys the best prices, and if we can't beat them, then Uniswap is always there, right? So I think it's not
Yep.
a competition. It's just how can you build a better experience and bring better rates to the end users, right? So that's essentially a good way to think about it. Now, going to uh, the idea of money itself, right? So I think, or maybe I'll dive into that later after I close the loop on the second part is around lending and so on and having decentralized platforms. So I think the power of decentralization here is obviously you don't have to trust anybody, right? And it's a powerful narrative in the sense that the only thing you trust is this immutable smart contract code, and everyone knows exactly what's in it, and they know the risks, and they interact with that. And if things go wrong, then obviously there's no one to blame but this smart contract that always functions based on a set of instructions that were agreed upon and that cannot be changed, which is really really good. But I think a key link there that is missing, if you think about the world, the way it's evolved, the world runs on credit, right? That's the fundamental. That's kind of how all of finance works. It works on
Yes.
credit. And I think in the current design, it's hard to make it mainstream if the key ingredient, which is the identity or on-chain identity that's missing, right? So if I want to lend you lots of money, and if you happen to be some random obscure public key, then it's really hard for me to take the risk and do that, right? On the other hand, if I have a way to securely verify this on-chain identity of the person that I'm giving that money to, then that opens up myriad of opportunities that were not possible otherwise, right? So,
Yeah.
so so I think lending in its current state, it has evolved significantly. Like if you think about it, right? So despite the current fiasco, the only protocols that survived were like Aave and Compound, right? And they kept functioning. So I think the next iteration would be where if you can add on-chain identity to really build a platform that can function based on credit, I think that would be the
Yeah,
future of
yeah, yeah. I
trading.
think I think to me one of the things that I see your brain doing on its
Yeah.
own is really understanding kind of orders of magnitude improvement areas for capital efficiency.
Mm-hmm.
So I just I don't that seems to be how your brain works on its own, right? So to me, like the idea of reintroducing identity, I mean, when you think about Web3 identity, I think one of the things that becomes really the Web3 part is absolutely the consensual fair exchange, right? So in a sense, it's kind of like, first of all, why am I surrendering information about myself, right? And the answer is always going to be because you get goodies, right? That's the
Mm-hmm.
answer, right? So you get better yields or rates or whatever, and like that's fine. And to me, the scope of how much you want to reveal, right, is
Mm-hmm.
obviously also up to you, right? So you
Yeah.
just you only submit the limited information that's needed in order to get the goodies, and no more, right? And so to me, like that's a lovely model. Now, obviously, like if you want the best possible rates, on
Mm-hmm.
a private credit, then like, you're going to have to submit like look up to a
Yeah.
classic, credit reporting agency, right? So you're gonna have to, yeah, obviously you give your social security number almost like a primary key, and then then they have everything. Right. So, but I think that like everything related to your credit, but I think to me, like that's super interesting because we're, in some sense, we're going all the way back to the beginning of the first 5,000 years of debt, right? Where it's sort of
Mm-hmm.
like, oh, I know you, I know you, here's some money.
So I think generally, I'm not anti KYC or anti AML or any of that.
Me either.
I think generally the way I like to think about it is the power, the essence of decentralization is transparency, it's of checks and balances to hold your gatekeepers accountable, right? So before that, when 2008 crisis happened, right, most people did not know what was happening behind the scenes. Like even the credit agencies that people trusted so much, but like essentially giving AAA ratings to bonds that were actually like subprime, right? So they were not AAAs. So things like these, right? The moment you bring more transparency to these things, whether anyone can look at the audit trail and figure out what's going on, and there's nothing hidden from people, right? So that actually brings a lot more efficiency to the system because now people are aware of what's going on, right? So I think that's really what I see is the power of decentralization and public blockchains, is that it actually gives people visibility into these sort of things, which were otherwise a black box, right, for the longest time. and then only when things go wrong, then you're like, oh well, let's repeat this again, but this time it'll be different, right? So that's not quite the case. So the moment you bring that transparency and you can hold people responsible for these things accountable for any of these mishaps that happen, then I think that's actually a pretty good system to be part of, right? So it doesn't have to be the extreme end of either side of the pendulum, right? It doesn't need to be 100% centralized with some gatekeepers who have control over anything. It also doesn't need to be to the point where it's very decentralized but also not usable, right? So I think the answer is
Yeah,
somewhere
yeah.
in the middle.
I always kind of very much enjoy our conversations because I think that your perspective is very close to mine in the respect of you're sort of a better systems builder, and I just really admire that because one of the things I've been talking a lot about in public is degen culture, right? Which isn't, I like to say degen culture isn't I'm going to cut myself. It's watch me cut
Yeah.
myself, right? Like it's deliberately oppositional in
Mhm.
nature. And what I like to posit is I like to say that if you're delivering better systems, there isn't a need to be oppositional,
Yeah.
right? Like we're not fighting. Like
Yeah.
it's like our stuff is better, right? Like we're not in a fight. Like there's nothing to fight about. Like
Yeah.
we just win.
No, absolutely. It's a non-zero sum game. Like even when people say regulators bad, uh, the
Hardly.
anarchists good or the other way around, I don't think it doesn't need to be that way either. If anything, if the whole idea of regulators is to protect user interests, right?
Which is valuable.
Then what blockchain is doing is it's making their lives easier, right?
Yeah,
It's making
transparency
things
should help,
transparent.
right?
So if anything, it's actually a good thing for them, right? So to not go against this, but actually work with the new technologies and essentially upgrade their systems, right? So the same narrative that was used to update the system 100 years ago by installing Federal Reserve, right? You can use the same fundamental logic to say like this is a new monetary system. This is an orthogonal framework that hasn't been used prior. So there is a lot to be learned. But the thing is, though, I think the change is happening, and I think the progress lies in everyone working together, right? So as opposed to trying to see how can one side win, because
Yeah,
that's just
yeah.
zero sum game, and it's not.
Yeah, yeah, I love that.
Mhm.
And so, in a sense, like, I think it's sort of where we're going. We won't need degen, right? Like
Mhm.
we won't really need opposition. We won't need that kind of tone of rebellion,
Mhm.
because in a sense, it's sort of like, yeah, everything will just be improved. So, what I'd love to kind of dip into is sort of your own, a little bit about kind of how did this start for you? Like, what was your kind of journey and the light bulbs, like the moments, the key moments?
Right. I think so. First of all, I don't have any Well, I don't come from a finance background, right? So I think my background is in aerospace engineering and robotics. Yes, I come
Space
from.
rock, space robots.
I was a space person. I still am, right? But I think uh, uh, essentially uh, the turning point to me was understanding how money works, which I never did back in the day in 2016 or before
Wow.
that. And once I understood those fundamental concepts, essentially seeing what this is doing or what this could do was essentially the turning point, right? And the realization was essentially crypto is to money what the internet was to the flow of information, right? And I think that was essentially where, like, if that's the case, then the impact is going to be like it's going to be the biggest tectonic shift in the humankind we're talking
I
about,
think
right?
I think you recommended me a book which was The Creature from Jekyll Island. I think you
Yes.
recommended me, which is really about the kind of formation of the Federal Reserve Bank,
Mhm.
and all these guys like Warburg and all these kind of like shadowy cigar smoking pinstripe people, creating this private bank, right? So I don't know, but I think I'm interested because it really speaks to your describing of the sort of full deconstruction of the monetary technology, top to bottom, including the monopoly of the use of force. So I'm fascinated by like,
No,
how did that happen? Like, how did you figure this all out? I mean,
so I think let me actually at least describe the way I see it. Right. So I think uh, if you think about, like, if you go all the way to back to the primitives and think of money, right? Uh, let's start with bartering, right? So the way people traded things or exchanged anything, exchanged energy, right? Was through direct exchange of goods, right? There was energy put into creation of those goods, and people traded those things. So you had bartering, and then slowly that pattern, essentially, you can think of this pattern as a 100% distributed system, right? So where everyone, or a mesh network rather, where each node is interacting with each other node independently, right? And then eventually this converged into a multi-centric distributed design, where you had like some commodities that became the incentive design choice that were being traded more than the others. In fact, they became more popular. Like, for example, in some areas, rice was perhaps the incentive design mechanism. Some areas was gold, was silver, right? Precious metals, whatever, right? So the idea being some commodities became more popular than the others, and eventually became the incentive design choice that people
Yeah,
decided to use,
yeah.
right? So
I
uh,
think you're talking about sort of the consensus formation
yeah,
around a base asset
yes,
that kind of solves the kind of coincidence of
of
wants
course.
problem, right? So,
Exactly, that is beautifully put. Right, so you can actually say this is a birth of the technology of money, right? So it was discovered. So and to that point, you can also define money as an agreement about energy, right? At the very fundamental level, like that's literally what it is, right?
I
It's an
love it.
agreement about two parties to exchange something of value that was created by expending some energy in that went into creation of that said value, right? And now you have money, particularly commodity money, and you can say institutions emerged eventually who started, like, essentially became the custodians of this money, and then the commerce emerged, and then you ran into a scaling issue, right? Like, well, commodity money is great. Now we have this technology that can be used as an interface, as a common language that can allow people to trade something of value. But what if you want to scale this to like conduct trade across continents, around different cities and states? Like, how do we scale this technology, right? So we invented currency, which can be thought of as a layer two solution for the underlying commodity money, right? So we essentially created these claim checks, the paper bills that could be used to redeem the underlying notes. But then,
So
yes,
before you double click in there,
yes.
I just want to highlight to the audience how mind-blowing something you just said is,
So,
right? Which is this idea of energy, right?
mhm,
Which is that when you think about energy, right? Like it's like, oh, well, the rice contains like solar energy, right?
mhm,
And the gold actually has kind of almost the twofold nature of energy, right? Which is it requires like exploding like a black hole neutron star to create, so gold is hard to create, right? But
mhm,
if you think about the other energy, it requires energy to mine, right? So you
yeah,
have to extract it, right? And of course, everybody knows Bitcoin takes energy to mine, right?
yeah,
And the other thing that's amazing about things like the US dollar is the US dollar is sort of the petrodollar, right? So it's sort of the demand currency
yeah.
for OPEC, right? So the idea of when you use the term energy and this, the kind of like, it's sort of an agreement about energy. I just want everyone to understand that that's very subtle and deep and interesting. So I just want to double click there, let the audience kind of like get their heads a little further blown, and then come back to like the paper that you're describing, which is, paper money.
No, no,
So let's go back.
no, I think I was going to come to that, but I think you kind of gave a little insight into that, which is great. I like to describe it by leave some subtleties and then come full circle and look, okay, well, this is kind of why. But I think it's good though. I think feel free to double click anytime there is something interesting.
Wonderful.
So you essentially recursing back of we had currency or discovery of layer two solution to scale commodity money, right? You had institutions that came about that became the custodians of your commodity money, and then they issued these cryptographic proofs, if you want to have an analogy there, or paper bills in this case, that could be redeemable for the underlying assets, right? So the beauty of this is you can actually scale paper across the globe, and you can actually conduct commerce in a much larger scale, right? And even going beyond that, you could have done more financial innovation in the form of like lending, for example. Now you can use your assets as your reserve to issue perhaps more currency units, right? And use that to basically create the system of credit, essentially, right? That's the start of your modern day banking system. So 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 uh, Now, if you go all the way now, fast forward 1,000 years, all the way to the creation of Federal Reserve and so on, right? You can almost think of Federal Reserve as a forced network update. And the whole purpose of that update was to move away from this idea of uh, each bank unit, everyone having. So by the way, before Federal Reserve, like each state, each bank had its own chart, own currency, right? They had own currency units. There was no dollar before that.
I
So the
love that.
idea was, you can actually create a more optimized system by essentially getting rid of all those things and having a one unified system, and we call it the Fed, right? But really, eventually, what ended up happening is you had that, then you had the gold standard, where your dollar was essentially backed by gold, but then eventually we said this is bad. We need to have like a currency called fiat that is not backed by anything, right? But the sheer word, the word of your government telling you that we must use this currency and nothing else, right? So the moment you move away from this idea of asset currency backed by money to a currency backed by nothing, you essentially remove the difference between the money and the currency plane, or merge them both into one, except there is no more backing of anything, right? Which is also why the whole idea of when you go about stable coins or backing something with something else, and people ask, what is this backed by? So technically, your dollar is not backed by anything, right? It's backed by trust and the force, the US military, right? And I think that in itself is a true backing, right? So there is no commodity backing it. We are not on gold standard anymore, right? And then obviously fast forward, we had the petro. So really, now this is where things get interesting, right? Before, when Bretton Woods was chopped off and you had dollars, right? So the whole idea was, now we have a system where we have dollars and we control the dollars, right? We create the currency creation and supply and demand of this currency units. But how do we create demand for these currency units, right? And the only way to do this uh, is to export the currency from the US, so that there'll be more demand. And the only way for you to get the currency out of the US is to move the production out of the US, so that you can then buy those things with the US dollar currency, and then buy those goods back into the US. So that's kind of, this is where this goes on a tangent on how come we ended up in a situation where we have all the production overseas. But the whole fundamental premise is that we want to create demand for the dollar, right? Which is also then goes back to the whole idea of, why do we need war, and why do we want to buy oil must obviously price in dollars, because that's kind of how you create demand for the dollars. And
Yep.
and then you also keep creating new currency units,
Energy
right?
again.
But the whole point though is the system. Now that I've talked about it in this scenario, you'll be like, that doesn't sound very sustainable, right? So it is just a ticking bomb waiting for a big collapse at some point in the future, right? Which very well might be. And the problem with that is people had no choice but to comply to that system, right? And if it does collapse, like, everyone who is part of that system was going to suffer, right?
I mean, I wanna underscore something,
Yeah.
just for the audience, right? Which is, when you're talking about the idea of energy,
Mm-hmm.
right? Then really what happens is that you end up with something that represents the energy, right? And
Mm-hmm.
obviously when you have a correspondence, right,
Yeah.
you can talk about things like pots of rice, right?
Mm-hmm.
So for example, like one of the things that used to happen is you had clay tablets, right, with cuneiform or some kind of ancient script that would basically be like commerce tablets, and the commerce would be like, okay, this documents how many pots of rice, right? So like all of that has a one-to-one correspondence, right? But the thing that's so interesting about the introduction of paper money is that there's this idea of the notion of counterfeiting,
Yeah.
right? Which is so interesting. And obviously, I don't know if I'm jumping towards something you're already going to, right? But like when you think about the idea of cryptography as anti-counterfeiting, right, then it becomes kind of like the natural
Mhm.
dwelling of this next generation, right? But to me, the thing that I think you're pointing at is you're pointing at as soon as you remove the gold or bimetallic standard or any
Yeah.
kind of energetic backing,
Yeah.
then essentially every dollar becomes counterfeit, right? Whether it's printed by
Exactly.
the like
Precisely.
the mint or anyone else, right? Like they're all counterfeit at that point
Absolutely.
because there's no energy.
Exactly. That's literally what I was going to tell you. That was my next point. So yeah, bingo. Like there you go. I think you kind of summarized what I was getting at with that. But I think, which is also why I think if you look at the idea of stable coins, I think the idea of stable coins only makes sense if that currency unit is again backed by something that is the incentive design choice, and that the incentive design choice is in fact the case because there was some energy that went into its creation, right? So in this case, a USDC makes sense, probably because most of the world still uses US dollar as an incentive design choice, whether by choice or force. It's still the case, which means having a currency that is one-to-one pegged to that price probably makes sense for the moment. But perhaps in the future, if let's say Bitcoin becomes the standard that people view as the incentive design, then perhaps a currency backed by Bitcoin makes sense, particularly or primarily to address the scalability of Bitcoin as an L1, right? So because you can't do so many transactions on L1 on Bitcoin, perhaps you can have a currency that can, right? Similar to how you use paper to scale commodity money. You could use that as a one-to-one backing to essentially scale Bitcoin in many ways, right? But you don't, uh, the whole idea of stable coin backed by an unstable currency doesn't make much sense, right? So you essentially, can you have a scaling solution? So whenever you have something backed by something, I think at least in my view, it makes sense when you're addressing that to address scalability of the underlying incentive design choice, right? So that's essentially the TLDR. But recursive backup, what's the moral of the story, right? So I think this goes to my first point, is the fundamental difference between uh, the whole crypto paradigm and fiat matrix or the crypto matrix is essentially uh, one is a system where you are born into and you have no choice but to use it. The other one is where it gives you the choice to opt in. So it's the choice between being born into versus opt in is what makes this paradigm a lot more interesting, right? So I think that's kind of what got me into crypto. I'm like, okay, this is what led me to realization that this is uh, the internet of money, no pun intended. So
So allow me to ask then a cheeky question, right?
huh?
Because when you're talking about this kind of idea of energy, right?
Mhm.
Like one of the things that happens with Bitcoiners, right, is that you necessarily start to talk about earlier proof of work coins like Yap stones, you know, those giant stone wheels that they used to carve on Yap Island, right? So all of that stuff relates to things like the energy of production, right?
Mhm.
But I guess what is your thought process around things like proof of stake and things like, you know, Ethereum, you know, and how do you reason about stuff like that?
Oh man. Okay. So I think I'll go back to incentive design choice, right? So the fundamental level, I think proof of work, uh, essentially what you're doing is you're putting energy into creation of the new currency. So
Yeah.
if I'm taking a purist take that energy or money backed by energy, then I think proof of work probably is the most purest form of having a decentralized money that, or not even decentralized money, but the idea of if I have to stick to the definition of money backed by energy, right? Uh, on the other hand, that there's proof of stake offer some interesting design that allows people to basically mine and by uh, staking their assets and then earning interest. So I think we haven't seen. So it's really hard to tell. It's early to tell whether it's gonna be successful or not because we haven't seen proof of stake model apply at scale like we've seen proof of work play out with Bitcoin and Ethereum, right? So
But
So,
haven't we seen kind of adequate scale? Like what I mean by adequate scale is like if you look at even something like a Tezos,
yeah.
right? Like if it were easy
Hmm.
to hack, like wouldn't it have already been hacked? Because like there's certainly enough value to make
Yeah.
it worth hacking, right? So I feel it feels okay-ish from that perspective.
So, mhm.
I'm more curious about your not about your opinion about like the sort of long-term viability of a non-energy backed kind of like construct.
So I think, uh, yeah, philosophically, I think it's a different answer, but practically speaking, it might yield a different outcome there, right? So I think, like I
I
said,
mean, you could argue
yeah.
this. You could
Hmm.
argue this, right?
Hmm.
Which is that the energy that backs Bitcoin is obviously the energy of production,
Yeah,
right? And the origin of the energy of production is actually compute, right?
exactly.
Which is that, right? But the other way of looking at it is that you could look at Ethereum as basically backed by
Mhm.
compute out the other end, right? Which
Yeah,
is that it's redeemable for compute,
yeah. So I think
which
that,
presumably costs energy
uh,
to compute.
so I think fundamentally, I think there's a place for both. What I'm trying to avoid is pick a side and say proof of work is better than proof of stake, or vice versa. I feel like there is a choice. That
Let's
people
get into like a maxi fight.
there's a choice people can make, right? Which is the beauty of crypto again, right? Is that you have a choice.
But if it takes energy to perform compute,
Hmm.
right, and Ether is redeemable for compute,
Yeah, but
then it's energy backed,
but
right? Again,
but the thing is, yeah, because the thing is, energy doesn't has to be expressed purely by like expending electricity into it. Like that's one way to look
yeah,
at
yeah,
it.
yeah. But what I'm asserting is that like one Ether is always redeemable for like a certain amount of like compute.
Exactly. And at the end of the day, fundamentally, you're staking your ETH, but you are, again, once again, batching the transactions, putting them in a block. So you are performing work, right? But it may not be like solving a puzzle, right? But you are performing some work. And then you
Yeah,
got, yeah,
what I mean is gas fee. That's
yeah,
what I
yeah,
mean.
yeah. Mhm.
Is that the amount of ether spent on gas fees
Yeah.
is really being spent on compute. So
Exactly. So,
so
so
that's
in that
okay.
sense, you're still, it's money backed by energy, right?
Thumbs up.
Yeah. So
So we're okay again.
whether proof of stake is a better civil deterrent mechanism than proof of work is TBD, right? So far we've seen proof of work survive all kinds of adversarial attacks,
Crazy
and it's
stuff.
lived, right? So nothing happened.
Yes.
Now, can proof of stake live by the same expectation? It's like TBD, right? So until then, it's hard for me to say that this is better because the other system hasn't been tested as rigorously as the other one.
Fair.
So, so, so I think that's my somewhat politically correct answer.
This is great. So to me, the entire kind of tour, which has been incredibly rollicking, it has really been kind of like, you know, your journey, right? So I think your journey clearly involved sort of lifting the veil of reality, right? And kind of peering into the sort of essential nature of the monetary technologies, right? So now you're like, now you've seen the beast at its core, right? So I guess to me, I'd love to kind of like dig into sort of like, you know, how did that like, so obviously it shifted your matrix of motivations, right? So now you're looking at like, you know, stuff to do, you know, and, you know, now you're working on the future of the monetary and financial system rather than space robots.
Hmm. Absolutely. So I think generally, again, at the end of the day, like I like to build things, right? So it's essentially uh, you're creating things, and I think that's what I like to do, right? So anything that furthers the human frontier, right? I would always like to be part of that, right? So whether it be space, commercial space tourism, building robots to perform reconnaissance missions, or whether it be financial engineering to build the next generation technology, right? So I think that's generally where my heart lies, is in creating new things. So I think, uh, and I'm like a systems person, so I like to think about anything from a systems perspective, whether it be building robots or whether it be visualizing your financial system as a dynamic system, which it is, right? So at the end of the day, you can actually describe your entire financial system as a highly complex dynamic system with different moving parts, and each little change is going to impact everything else. Like same way you can describe your human body as a dynamic system with a collection of multiple single systems that comprise together to form your entire complex nervous system or so on. Right? So generally, I think that's what I kind of obsess over, is understanding how these systems work and how they interact with each other, and then how one small change can impact the entire system, and what are the trade-offs that we need to make it work the way that it's
So
functioning.
so this kind of brings me to sort of roadmappy
Mm-hmm.
topics, right? Which is, I think you alluded to this sort of bridgeless bridging cross-chain kind of construct, right? Which I think is exciting, and I'd love to have you unpack that a little bit. But like what about sort of further roadmap for Hashflow, and how do you see this expanding in the future?
No, absolutely. So by the way, the cross-chain swaps is live already. So you can go right now, send Ether, receive AVAX natively, get guaranteed execution. There would be no slippage. There would be no MEV exploits, and there is no bridging. Like you don't have to rely on any external bridge.
The
So then you
bridgeless, the
have
bridgeless
the
bridge.
bridgeless bridge. And the way it works again goes back to the fundamentals, right? So I think there is, like, at least when we were looking into building cross-chain solution, there were like two ways to doing it, right? So one is you use an AMM on one side to enable a swap, and then perhaps let's say you want to trade Ether for AVAX. Then what you do is you go on Uniswap, you swap Ether for USDC, and then you use the USDC and connect it to an external bridge called Stargate or Wormhole, anything, right? And then you bridge USDC for USDT on AVAX, and then you go on AVAX Uniswap and then transfer or swap USDC on AVAX for AVAX on that pool, and then transfer it back to
Yep.
the user.
Yep.
So
Yep.
the problem obviously is you have slippage and MEV on one chain, and then you have at least 5-minute time delta in which the price could have changed significantly, and then you have another AMM swap on the other side on AVAX, right? So this is just not very sustainable, and you already know where I'm going with that, right? It's essentially, is when you have 5 minutes delta between two trades and the price can swing massively, it's way too risky to trade on something like that, right? Uh, what you need is a more robust design that guarantees execution and does not carry all these risks, and also does not have to rely on external bridges to move funds, right? So on that note, the way we define bridge is essentially where you have to send an asset on one chain and then lock it up, and then you have to mint corresponding asset on the other chain uh, that is one-to-one pegged to the asset that was locked on the source chain, right?
Right.
And generally you have like Ethereum bridge where people lock in Ethereum on Ethereum, then they mint Arbitrum ETH as an example, and then there are other bridges that use stable coins because inherently they are all tied one to one. You can technically lock in USDC on chain one and then mint another
Yep.
stable coin with the same value on chain two, right? But again, it makes things more complicated. But with Hashflow, given that it was already inherently an RFQ system, we didn't have to worry about any of these things, right? Uh, the way it fundamentally works is your market maker gives you a quote to do a swap, and that quote is already pre-signed or cryptographically signed by the market maker, and your taker is essentially just submitting that cryptographically signed quote to the contract, and the contract does the swap after checking the signatures, right? So you can just extend this logic to do it on two different networks. So what's really changing here is you have the cryptographically signed quote that you receive from the market maker go on chain on the source chain where the signature is checked, and then first transfer happens on source chain, and then you rely on your external validators to verify that transaction has taken place, and then you relay that transaction, that information to destination chain to carry out the next set of instructions, which is to transfer the assets to the user, right? And the simplicity of this design is essentially uh, so long as your external validator set is working fine, you don't have to worry about anything else, right? Which is fundamentally the entire cross-chain game to begin with. Like any cross-chain protocol right now is some combination of how do you design your validator set to be safe, right?
Sure.
So long as you can build a validator set, then that works, that you're comfortable with, then you can build a cross-chain application on that. So the fundamental question for anyone building cross-chain things, then what they must ask is which external verification system are they most comfortable using, right? And use that to make a decision, right? So if you look at layer 0, they use this combination of relayers and oracles. The oracles are acting as their validators. If you look at Axelar is using a set of like 40 different validators who work on a proof of stake model, right?
Yep.
And then they have this consensus mechanism to verify that transaction. Wormhole has the 19 guardians who again verify a
Yep.
transaction has taken place.
Sure.
Abacus is using something similar. Nomad is slightly different in the sense that anyone can verify or validate a transaction, but then they have a 30-minute time window where someone can challenge that proof. So it's more of an optimistic design, which adds no extra security at the cost of time delay, right, or latency. But generally, if you see the pattern is which external verification system works the best for your application, and you use that, and then you use that in conjunction with your cross chain application, right? So that's the slightly more detailed explanation.
Yeah, absolutely. No, but super helpful because it's,
Mm-hmm.
important from the perspective of trying to solve this incredibly thorny problem of bridging, right? And I think with an RFQ style system as well, like you don't have this kind of like very attackable poolings of liquidity on either side, right? So,
So
that becomes a very juicy target for
mhm.
attackers.
I mean, you can have a pool, that's fine. Uh, but again, the pool, the more important thing though is that you don't need to collateralize tons of money on either side on every asset in
Yeah.
order to just
Yeah,
bridge
yeah.
one for the other, because you just don't need it. And I just don't think you need bridge for these sort of things. It's an extra,
Nice.
yeah, it's a
Nice.
friction,
Yeah.
if anything.
So what about like future? I think we're nearing on time, but I'd love to kind of get your big idea, future vision.
So I think a lot is coming on still, right? So we launched cross-chain, we just introduced RFQMs, but I think the key thing, going back to what's the biggest thing, what Hashflow is going to be useful for, is we said multiple times, is that being able to price anything that goes beyond spot, right? So I think if you want to essentially unlock the next sound like a visionary, the $1 trillion market, I think it's not in spot. It's in the non-Delta One assets, right? So essentially, now that we have the core infrastructure, what we can do is we can start innovating at the level of what kind of asset classes that we offer, right? Because we
What
have
about what about like NFTs?
NFTs could be an asset class too, right? So I think the good thing is it'd be interesting to see if there's a way to market make NFTs, right? So I think that is something to look
Interesting.
into. Like we've been thinking about that, like on who would be the market maker, how would we uh,
It's
enable
difficult.
better price discovery for NFTs,
Yep.
given that they're so subjective. But it
Yeah,
turns
and
out everything's
illiquid.
subjective, right? So that would be an interesting way. But because you mentioned NFTs, I do want to say that our DAO, once we launch, is going to be leveraging NFTs significantly. Like the whole idea of building a DAO that works as a way to incentivize people to participate and gamify it. I think that's something we're building out, and I think that
Yeah. That's been an incredibly fun thing too, as a kind of early user and investor in Hashflow, like getting Hashbot
yeah.
NFTs and engaging on that basis has been very entertaining and fun and, and playful and, brand aware. So that's been incredibly refreshing.
So,
Yeah, so unfortunately, I think we hit the top of the hour, but like as always, like incredibly rollicking conversation. It's always an incredible pleasure, and welcome back on the show anytime.
no, of course. I think we definitely need a part two to talk about the NFTs and how the DAO is going to shape up, because I think that's another hour easy. So
Yeah, and this
we're going to
this
design that.
involved this involved like an incredibly strong unpacking of this whole like
Mhm.
piercing the veil of money. So I think it's it's going to be a really fun episode for the audience. Thanks so much.
Of course. All right. Thank you.